Hello traders, investors, and crypto enthusiasts. Welcome to our channel where we deliver deep dive analyses, hot news, and reliable projections about the blockchain universe, Web3, and digital money trends. Today we're diving into a game-changing move in the crypto market, Metaplanet. A Japanese financial technology firm known as the Strategy of Japan has announced plans to raise BRL 29.7 billion to significantly expand its Bitcoin reserves. Currently holding 8,888 BTC, the company aims to reach 100,000 BTC by 2026 and 210,000 BTC by 2027, equivalent to 1% of all Bitcoin that will ever exist. If executed, this would position Metaplanet as the 10th largest BTC holder globally, behind giants like MicroStrategy, Galaxy Digital, and Tesla. Let's explore the details, regulatory risks, and how this announcement could accelerate institutional Bitcoin adoption worldwide. Metaplanet, the new Asian giant in the Bitcoin accumulation race. Founded in 2019 as a fintech blockchain solutions provider, Metaplanet has emerged as a key player in Japan's crypto scene after announcing its aggressive Bitcoin acquisition strategy. Initially focused on blockchain services for local institutions, the company now targets a bold goal: reaching 210,000 BTC by 2027. At current levels, its 8,888 BTC holdings already make it Asia's largest BTC-exposed firm and the 10th largest globally. Metaplanet's plan combines corporate financing, debt issuance, and equity sales, leveraging high demand for BTC exposure. The company estimates that with Bitcoin rising to 150,000 United States dollars by 2026, its BTC assets could be worth 15 billion United States dollars, surpassing its current market cap of BRL 10 billion. This creates an intriguing paradox. Metaplanet is betting that BTC will become a standard reserve asset, capable of underpinning its balance sheet even amid yen inflation or instability. The move aligns with global trends. Firms like MicroStrategy and Galaxy Digital have adopted BTC as a reserve asset. But Metaplanet's entry adds an Asian dimension to the race. With Japan being the third largest crypto market globally, Metaplanet could catalyze similar moves by other Japanese corporations. Financing and growth. How Metaplanet will reach 210,000 BTC. To achieve its 210,000 BTC target by 2027, Metaplanet is deploying a mix of equity sales, BTC-backed bonds, and strategic bank partnerships. Tokyo Stock Exchange equity sales. A new share issuance aims to raise BRL 10 billion. Funding direct BTC purchases via exchanges like Bitstamp and Binance Japan. BTC-backed bond issuance, bonds tied to BTC price movements. Tracked institutional investors seeking indirect exposure without custody complexity. Partnerships with Japanese banks. Negotiations with Mitsubishi UFJ Trust Bank and SMBC Nikko Securities. Explore credit lines using BTC as collateral for new financing. This model mirrors MicroStrategy's approach, which raised 1.25 billion United States dollars in bonds from 2020 to 2022 to acquire 150,000 BTC. However, Metaplanet faces unique challenges. The yen has a negative correlation with BTC, complicating hedge strategies. Additionally, the Bank of Japan maintains near 0.5% interest rates, making financing accessible but pressuring the local currency. Market response has been immediate. Since launching its BTC accumulation strategy, Metaplanet's stock surged 8,400%, leading daily trading volume on the Tokyo Stock Exchange at BRL 1.2 billion daily. This reflects not only optimism for BTC, but also a cultural shift in Japan, where firms historically avoided digital assets after the Mt. Gox collapse in 2014. Today, Japan hosts 11 regulated crypto exchanges. It's creating a friendlier environment for projects like Metaplanet. Market impact. How Metaplanet could influence Bitcoin's price. Metaplanet isn't just another firm buying Bitcoin, it's poised to directly shape crypto supply-demand dynamics. Its target of 210,000 BTC could absorb 10% of annual new BTC mined. Given that mining rewards have every 4 years, this means if other corporations follow, Bitcoin's stock-to-flow ratio could skyrocket, potentially pushing prices to USD 150K to 00K in coming years. The company is also using innovative mechanics to integrate BTC into the real economy. Metaplanet plans to accept Bitcoin as payment in partnerships with Japanese retailers while tokenizing real estate assets via blockchains like Ethereum and Solana. This creates a virtuous cycle. By increasing BTC demand, Metaplanet strengthens its position as a fintech leader while driving Bitcoin adoption in Japan. Critics, however, question sustainability. Bitcoin's volatility seen in April 2024's 30% drop in 48 hours after Israel's strike on Iran could strain Metaplanet's balance sheet. Additionally, Japan's financial services agency hasn't recognized BTC as legal tender, creating compliance risks. Even so, Metaplanet's success so far suggests the market is willing to overlook uncertainties in exchange for exposure to digital gold. Regulatory risks and geopolitical challenges, Metaplanet's battle with local authorities. Despite Japan's crypto-friendly stance, Metaplanet faces significant regulatory hurdles. The FSA, while approving over 11 crypto exchanges, still classifies BTC as digital property, not a legal currency or reserve asset. This limits the firm's ability to use BTC as collateral for loans, a model widely adopted by DeFi protocols and tokenized asset platforms in the West. The Bank of Japan remains cautious about financial decentralization. In a recent interview, Governor Kazuo Ueda stated that BTC poses a risk to monetary stability, especially if more firms follow Metaplanet's example. This contrasts with the US SEC's approval of spot BTC ETFs and the EU's legalization of crypto-backed tokens. Highlighting Japan's regulatory lag, geopolitically, Japan is vulnerable to Pacific tensions. With strained relations with China and North Korea, and energy dependence on Middle Eastern oil, the country faces macroeconomic shocks that could impact Metaplanet. For instance, if the US imposes new tariffs on Japanese imports, the yen could weaken, forcing Metaplanet to buy more BTC to protect its balance sheet. To navigate these barriers, Metaplanet is exploring workarounds. The firm announced it will list BTC-backed bonds on the Singapore Stock Exchange, allowing foreign investors to participate without facing Japanese regulation. Additionally, real estate tokenization via blockchain is being structured with JPY-backed stablecoins, easing liquidity and reducing direct currency exposure. Technical analysis and investment strategies, profiting from Metaplanet and Bitcoin. Metaplanet's strategy sits at a classic risk-reward crossroads. Here are 3 approaches based on risk tolerance. Conservative strategy. Accumulate near JPY. 1,200 stock support. Entry. Buy zones at JPY 1,200 to 1,250. With stop loss at JPY 1,100. Take profit 1. JPY 1,300. Take profit 2. JPY 1,400. Suited for long-term investors who believe in Metaplanet's infrastructure, such as its Durango upgrade, which boosted network capacity by 300%. Aggressive strategy. Trade the BTC accumulation breakout. Entry. Post-break of JPY 1,300, confirming bullish momentum. Hedging strategy. Combine Metaplanet with BTC, ETH, ETFs. Allocation: 50% BTC, 30% ETH, 20% Metaplanet stock. Why? BTC, ETH, ETFs offer downside protection, while Metaplanet provides leveraged exposure to Bitcoin's rally. Risk management: rebalance quarterly to maintain exposure. Ask. Regardless of strategy, tools like Glassnode's MVR-VZ score suggest undervaluation, flashing a buy signal for risk-tolerant investors. Ask. Competition and projections for Solana and Ethereum ecosystems. While Metaplanet drives BTC accumulation, competitors like MicroStrategy and Galaxy Digital also expand reserves, creating an institutional gold rush. However, Metaplanet's impact extends beyond BTC. It tests the resilience of networks like Ethereum and Solana, which compete in DeFi, NFTs, and real-world asset tokenization. Solana, for example, already processes 1.2 billion United States dollars in daily volume via DEXs like Jupiter Exchange and Radium, with 100K transactions per second. Metaplanet's use of SOL for real estate tokenization and smart contract integration could accelerate Solana's adoption in DeFi and RWA. Meanwhile, The Ethereum Foundation is negotiating with Japan's government to launch ETH-backed public debt tokens, potentially creating a $50 billion United States dollars RWA tokenization market by 2026. Yet, BTC concentration risks, reducing altcoin inflows. Projects like Render and World Mobile, which rose 400 to 800% in 2024, may face selling pressure if institutions prioritize BTC. Metaplanet's move not only reinforces BTC as a reserve asset, but also tests the resilience of networks like Ethereum and Solana, which rely on asset diversification to sustain growth. Metaplanet on the global radar. Bitcoin's future in Japan. Metaplanet is at the center of a silent revolution in Japan, integrating Bitcoin into traditional sectors like finance, real estate, and RWA tokenization. Its plan to accumulate 210,000 BTC by 2027 not only boosts institutional demand, but also sets a precedent for other Asian firms to follow. Over the next 12 months, investors should monitor BTC purchase activity by Metaplanet, which could impact price and liquidity. Spot BTC ETF approvals in Japan, a move that would attract institutional capital. Regulation of stablecoins and RWA tokens in the country, which could expand digital asset adoption. Final takeaway is clear. Metaplanet ISNT just reshaping Japan's view of Bitcoin. Redefining the future of the digital economy. If you believe in the region's potential, share your thoughts in the comments. Don't forget to subscribe for real-time updates and join our live streams, where we dive deep into charts, news, and blockchain trends. Remember, crypto investing requires research, discipline, and patience. Bitcoin could be a stellar bet, but always assess your risk profile before acting. Until next time, may the market treat your trades kindly.